Welcome to the Edge Up podcast with your hosts Reed and Glenn from Hawaii Trading Academy.
Thanks for joining us on this podcast episode. The question, Reed, I got for you today, I want to talk about our funding companies a scam.
It's a great hot topic right now. You know, like I'm sure like in the news right now, my Forex funds that are formerly known as MFF, you know, they're going through this whole shutdown. They're not allowed to withdraw funds. They're not allowed to give funds out. And a lot of traders are pending funds with them. And I think, for starters, it's a great testament of why we need to be diversified, especially in the trading field.
Yeah.
You know, like we always hear diversify your portfolio. As traders, you know, growing that capital, like diversifying those funding companies.
Right. You personally had an account with them.
Yeah. So yeah, actually I did have a personal account. It's a 50K account.
Right.
And I was trading it. It was over a year. It's my longest held account.
Yeah.
And unfortunately, too, one reason why I went with them, Glenn, is because like they're based in America, you know, and so I thought that gave it like this secure, this patch, this stamp of approval. Like, hey, yeah, cool to go with MFF. Like they're legit.
Mm-hmm.
But apparently, I guess some court documents revealed that the guy was scamming people, or he was using clients' funds and living this lavish lifestyle, right?
Right.
So that's really what came down. And the US and Canada found out. I'm sorry, MFF is based in Ontario, Canada, not the US, but the US barred them as well from allowing them to function.
US clients.
US clients, right. So there's no new clients coming on board with MFF.
Yeah.
What about what are your thoughts here? Are funding companies scams, or like what's the difference between, I hear this like, no, MFF is not an actual prop firm. Right? They're a funding company. Prop firms and funding companies, they're different. So like,
yeah. Well, I mean, we'd love to share some insight on that. You know, we did a bit of researching on that topic, the difference between, there are actual prop firms. They're not new. They've been around for decades, especially in Wall Street or Chicago, where they're proprietary firms, where they use their own capital to invest in certain products such as stocks, bonds, derivatives, whatever trading instruments they may feel that is relating to their strategy, right? Okay, so like traditional prop traders, they have more skin in the game compared to a remote funding company. The way I feel is that they physically show up to the trading desk or office. They are interacting with brokers personally. It's a business model. It's a structure, right? It's a legit business, and they have either their own private equity that they're trying to grow, or they're investing for other investors as well. And also another thing too, they're heavily regulated. They
prop firms,
proprietary brick and mortar.
Yep.
They're regulated, where the traders have to get certain licensing, certain registrations with the CTFC or the NFA. National Futures Association.
Okay.
Those are different things that they have to go through in order to keep the prop firm running in good standing. Going back to the difference, right, with remote prop firms, we see all these guys popping up like almost every week now.
Yeah, I mean, it's like an intermingling. Like people are calling funding companies prop firms, and if you trade for a funding company, you're a prop trader.
Yeah.
And in essence, it's kind of right, but like going back to what prop firms are, like actual legit proprietary firms. With prop firms, you're earning your right to sit at this desk, whereas with funding companies like MFF, TopStep, FTMO, these companies, hey, I'm going to give you $500. Let me sit at the desk. You're paying to play, essentially, not earning to.
Yeah. And plus you have to do the profit split, so that's an ongoing fee that you will be paying as well.
That's true. Yep.
Yeah.
Yeah, like so some companies you're paying monthly for funding companies.
Yeah.
But proprietary firms, I feel like, it's part of that commission cut. Like you earn X amount, we're going to take, I know some prop firms, it's $2,000 to sit at the desk, so there are dues there as well, but
Mm-hmm.
it's just you are earning the right to trade with more capital as well.
Yeah, absolutely. Does the location have any influence in regulation of the trading prop firm?
Well, I think we found out that no, it doesn't. But it brings the question up, man. Like, if MFF wasn't located in North America, Canada, and would the US and Canada have gone and shut them down? I want to say no. Like,
Yeah.
maybe if it was based in another country that's not regulated, who knows how long that this guy or MFF would have gotten away with it, right? So it's kind of good. I think location, in a sense, it does matter. But then again, look at the example FTMO. They are the biggest funding company, and I want to say probably the longest standing funding company that majority of people know about.
Mm-hmm.
They're based in Czech Republic.
Yeah.
And I don't know, like as a business owner, I think taxes, right? Maybe they did it for tax reasons.
Yeah.
Based out of Czech Republic. So I mean,
for I think the traders who are looking to get into these funding companies, it's something to take note of because you're essentially in a partnership with these companies and business. They're essentially a business and they're operating within their own laws of where they're at. In my personal opinion, I rather just stick to U.S. base because I was trading with FTMO for a little bit. Gotten paid out, it was great, but I was looking at the long run.
yeah. So speaking of like companies based in the U.S., I know there's a couple now that are growing in prominence, and I think one is my funded FX. So I knew MFF this was happening, but right before this thing, like the shutdown happened, I went with my funded FX, and he's very active. Matt, the CEO, is very active on X, or formerly known as Twitter, and he's saying like he's investing hundreds of thousands of dollars, so he's ahead of the curve. So like stuff like this won't happen to his company. So I think as these owners and these companies are becoming more transparent, the more regulations are keeping these companies secure and making sure that the interests are in favor of the trader rather than the owners and the company.
Yeah.
I think that's going to be a win. Speaking of best interest, another thing that came out with the whole court documents with the MFF and everything was they were saying like basically they were trying to make the trader lose with commissions. I forget the actual verbiage, but we'll link that in the description. Check out all the verbiage and the lingo and the paperwork there. But they were really trying to out the traders out of their own trades and get those commissions for that company, make the trader lose so that the company could win. So, and that's in internal emails that they'll find it. Yeah, so
I didn't know that.
Yeah, so it's kind of it's wild. So I mean, we'll check they shared it. Matt, speaking of Matt, the CEO of My Funded FX, he shared that little tidbit. And he's like, it is kind of insane, like what's happening. But a couple companies, Top Step and Apex, I know that they've been around, but they're futures, right?
Futures,
you are a future trader, Glenn's trader. So
one of my first funding accounts was with Top Step, and then with FTMO after. But Top Step, great company. The support that they have for the traders coming in, as far as education, training, they have weekly coaching. They're a great company.
Sounds very similar to like actual legit prop firms, right? Because like prop firms, the in-house prop firms, they help traders. Like other traders, top traders will coach other traders. Like I think SMB Capital, they're a really legit prop firm company.
Yeah.
And you have the senior traders helping these new traders that are coming on the desk.
The U.S. based Apex.
Top Step is solid. Top Step did have a Forex program. I remember you and I were both in. I actually that was my first prop firm that I actually got paid out. It was like only $136, and then they shut it down.
Man.
They shut it down though. They shut the Forex side down, and it kind of makes me think like maybe
This was what, 21?
Had to be 21.
21, right?
2022, early 2022. Makes me curious, like why did they shut the Forex side down, right? Maybe they knew like, futures is only an actual regulated type of instrument to trade. Let's not step into the forex
Let's
side,
not
right?
expose
Yeah,
ourselves.
let's not expose
Yeah.
ourselves. So like maybe that's why they shut it down. I don't know.
Yeah.
You know, because like a lot of the like MFF, they were a forex company.
Yeah.
So speaking of futures, we're good with that. But like I'm a forex guy, man, and I know you trade EJ. That's forex. What are the companies you think like fill the boat? So I mentioned my funded FX,
Yep.
TMO.
Yep.
But you know,
Yeah.
any other like US based
Yeah.
companies you could think of?
This year I started trading with Surge Trader.
Oh, okay. Oh,
Yeah.
that's right. They
Yeah.
unfortunately they had a little like legal issue.
They had a thing. They did have a thing. That was a month or so ago.
Yeah.
And SEC settled with the owners and for a hefty fine. But as far as the business of working with the traders, the payouts, it's still going on. It's still continuing business as usual. They weren't really affected. They didn't have that drastic shutdown as my forex funds. But my experience so far with them, it's been great. And
Yeah.
I had a funded account with them. I'm going for a larger account with them right now.
Solid.
Their platform execution has been okay, like steady so far. No red flags for me personally. But yeah, that's another alternative if you're sticking to Forex or the CFD side
Yeah, that's
of
good to
trading.
know. I remember they're based in Florida, right?
Based in Florida, yes.
Yeah, yeah. Also, like one thing that I think of, man, is that these company, it doesn't matter if it's like let's think bigger picture here.
Yeah.
S&P. I think there's like a statistic there, like the companies that were in the 70s and 60s and 70s that were the top 20. I think only like one stayed around.
Stayed around, right? Yeah.
So basically, companies come and go, man.
Yeah.
Just like I'm sure prop firms are gonna come and go.
Yeah. Yeah.
It makes me think that like it doesn't matter if these prop firms come and go. It matters what the skills that you retain. So it's because we're not YOLOing. You know, we have a system, we have our strategies.
Yeah. Yeah.
That we are trading. We're sticking to the plan.
Let me ask you.
Yeah.
Right when you started trading with these prop firms, and they have rules, right? Their criteria to stay trading with them. Do you think it made you a better trader or a worse trader?
100%, man.
Yeah.
100%. Of course, I didn't like it. You know, I didn't like the authority of like them.
Like, what's the example? Like, what they have? They limit your drawdown. What was it?
They limit the
5%,
drawdown. You know,
6%.
Yeah. So it makes you trade smaller. You know, because like I like the whole only trade 1% risk. Don't go over 2%. Now with like companies, like my first experience was with FTMO. I learned that 1% is even too much because like at the beginning it was on 5% drawdown, you lose your account. You know,
Yeah, 5 losses, right?
Right, that's 5 losses, and I average around 4 to 6 losses. Like that's my window that I could breathe. Right, I have to reduce my risk. So that it really taught me to become a risk manager rather than go for the profit. Like get that profit first. You know, it was okay. How much can I lose first? Like that's really what I was focusing on.
Yeah, absolutely. And it doesn't. To me, it keeps the traders in check. You know, because these funding companies are offering big sizes. You know, 100K, 200K, 500K, million.
Yeah,
you know?
I mean, like yes. Speaking of Surge Trader, I think they do. That was the first $1 million account that I saw that you could get. You know, I mean, you have to pay, but that's amazing to have that accessibility now.
Right. I think just that whole opportunity of these companies, they're giving a great opportunity for regular traders, the average people to go ahead, utilize their skills, show that they're profitable, and able to make that big change in their lives. To eventually, hopefully, replace your income as from your current job or career to becoming the trader that you want to be.
Yeah. Like the opportunities are always going to be there, especially in the market. The market's not going anywhere. Yeah. Right. We talked about this multiple times. It's just we want to be independent, and to really be independent is you build your own capital. And I think that's what a lot of people are getting wrong or a lot of traders are mistaking prop firms as like, hey, all I need to do is get this $1 million account with Surge and I'm done. Like my life is complete, right? But that's not the point. You still got to trade that $1 million. You still got to perform. Yeah. And then save all that capital to get your own $1 million account.
Absolutely.
You know?
Like Getting the account is one thing. Hitting that profit target, like you maybe the timing was just perfect for you. You could have got into this spectacular trade and it hit your 10% profit target. The most important thing I feel like is keeping the account.
Yeah, that's
You know,
smart.
once you pass it, that's one thing. When you keep it and when you can be profitable consistently, that is the ultimate challenge, I feel, you know.
Yeah.
And so I forget what the stats were, dude. The stats were nuts, right? With the amount of people passing it and the amount of people actually keeping it
Yeah.
and
And I
withdrawing.
think it's cool because a lot of these companies now, they're being as transparent as possible. They're actually showing that data. And
Yeah.
they send out a newsletters like, hey, we had X amount of percentage
Yeah.
pass the funding account. We had this
Right.
many people get this payout.
Right.
And then we had this many people who are now trading, their account for 6 months, right? And that's like less than 1%.
Yeah.
It is like all the statistics that we hear thrown around,
Mhm.
like these prop firms, the funding companies are really gathering this data now, and I think it's really fascinating to see it.
Yeah, I love the transparency. I love that they're setting expectations. Like,
Yeah.
guys, this isn't, the lotto. Yeah,
Yeah,
like,
exactly.
like you gotta actually work for this, and do it.
You know what? You made me think too. One thing is how like trading has become so much more available to the masses now.
Thanks to technology
Thanks to technology
and thanks to these companies.
and these companies, right? And these companies are like dangling this golden
The carrot.
the carrot, right? And they're like, "Hey, you want to trade $1 million?
Yeah.
All you need to do is pay us a couple $1,000, and you could have access to it." And I think that people, yeah, the money eyes, right? But then,
So who is it? Like, who would these funding companies not be for? Like, how do you know it's not for you?
there is a learning curve. So I could see a trader coming into the market and only being exposed to prop firm traders. They're looking at how much you could make as a trader, right?
Yeah.
And they're like, I want to do this.
Yep.
And it's always dependent on the person.
Yeah.
Because there's going to be the people who blow 10 accounts and keep going. And there's going to be a person who blows 2 accounts and be like, trading's not for me. This is a scam. And then they're going to leave reviews on all these prop firm accounts. Like, these are all scams. They're out to get your money.
They're forever just hating.
Right, because they couldn't do it. So
Yeah.
I think it's dependent on you, the
Yeah.
listener,
Yeah.
right now.
Yeah.
Are you going to be able to have that grit and
Uh-huh.
have that mental resiliency to keep on going, right? Throughout all the drawdown. Because every trader will have drawdowns, man. Even these multi-million-dollar traders, these funding companies, they have drawdowns. It's part of the game.
Part of the game.
Part of the game.
You gotta
And
have it.
You got to overcome that.
Absolutely.
I think in a way to overcome that is to have a plan in place. Always have a plan in place when you reach a certain drawdown.
And if you're a trader and you don't have a trading plan, adopting these rules that the funding companies give you is a great start.
Oh, absolutely. Yeah,
it's a great start. They're capping, like, hey, this is just focus on hitting 10% or 8%. Let's focus on keeping your losses to 5 or 8 or 6. So just that right there, I wish I had that kind of structure.
Yeah,
when I started out, I
Same.
didn't understand risk management. So that's really the thing that popped out to me when it came to these funding companies.
Yeah, like if you can't stick to the plan that someone sets out for you, let's say you have no plan.
Yeah.
And a company's like, hey, stick to these plans. If you can't stick to them, then yeah, absolutely, trading can't be for you. There is a plan that whether you get it from someone else or you make it, it doesn't matter. You have to stick to a plan.
Yeah.
That's proven. And if you can't stick to that plan, then yeah, I mean, maybe trading isn't for you. Trading isn't for everyone. This is a side topic. Is trading for everyone?
Yeah.
No.
I think too, though, like, say you the whole utilizing the remote prop firm funding companies is not for you because you need a little bit more hand holding and more structure. Why not go for actual proprietary firm? Go move to New York. Go apply to these guys and like have that one-on-one interaction where they can mold you into the trader that they are already. So like that is another option. If you really want to think that trading is for you, if you really want to work through it, then that is another option, I feel.
And you made me go down the wormhole. Like I think of turtle traders.
Yeah.
So if you guys don't know about the turtle trader story, is basically they put it out in these 2 prominent traders with their names now. They put out an ad in the newspaper saying, "Hey, if you want to learn how to trade, just come on by. We're going to interview you.
Yeah.
And if you pass our interview process, then we're going to teach you." And I think they were able to identify who would be a good fit, right? And they comes to find out lawyers, doctors, athletes weren't fit for it.
They weren't.
Because they knew what winning was and they knew
Yeah.
what losing was. They didn't know that losing was okay, right? They wanted to be right, and I think
All the time.
Exactly. So I think trading really isn't for everyone, unfortunately.